needle on the record.
Welcome to Wage Cucking with Jmo.
All right, guys, we're back. Welcome to yet another episode of Wage Cucking with Jmo. It's been a few months, but we're back in time for the bull market, or we're recording today. The 1 day or 1 week bear market seems to have commenced. We have Guy from Ethena back. I don't think Guy needs an intro, but we had him on the podcast, I want to say like around a year ago. This was like pre-launch of Ethena. So I believe it was like maybe in beta at the time. Like the TVL was maybe like, I'd say like, in the millions, definitely under 100 million. Fast forward today. Happy to have you back just because Ethena is like, it appears to be one of the fastest growing DeFi protocols. I believe your TVL is around like 5 or 6 billion at the moment. You released the token with a pretty high market cap. A lot of market participants. How you doing today, Guy?
Good. Yeah, I think as I was saying, feeling a little bit poor this morning, but I think we long overdue for a correction like this. So, reasonably happy with how we're sort of holding up through the volatility. And I think every single one of these events are pretty good to go through because I think just showed to the market that I guess the actual design and stuff is pretty resilient to it. So yeah, I think it's pretty normal course of business for crypto at the moment.
Yeah. So since we last spoke, I guess a lot has happened. I see. When we last spoke, Ethena was more of a conceptual idea above anything else. We didn't really know if it would succeed or not. I mean, maybe you did, but like there was there were some doubts from the community. If like fast forward to today, I believe you recently flipped DAI, like one of the longest standing decentralized stablecoins in terms of TVL, integrated into a bunch of DeFi protocols off the top of my head, like Spark, Morpho, Aave, Pendle, Gearbox, uses collateral on exchanges like Bybit, Binance, Deribit, stuff like that. I've expanded to the Solana chain, have expanded to Bitcoin. During Ethena's pretty rapid growth, what were your expectations going in? Like, did you anticipate like us talking today, you guys sitting around like a 6 billion TVL? And was there anything that was a big surprise to you?
Yeah, I think my honest perspective is that I thought we'd get here eventually, but I just didn't think it would happen in the space of a year. I think the piece that I underestimated personally was just the speed at which the derivative market as a whole would actually grow through the year. So I think when we had that chat originally, just like basic open interest metrics were like 25% of the size that they are right now. So when we sort of thought about what is the actual scale that we could get to, I think we, even in our upside scenarios, just underestimated how big the derivative market could actually grow. So I think that's just one interesting data point that we've also seen through other cycles as well, which is that open interest seems to scale at a much faster pace than actually like market caps and prices. So, BTC is up roughly 2x from that moment that we're speaking, and open interest, depending on which contract you're looking at, is anywhere between 3 to 4x. So yeah, I think we've been happy with the growth. Obviously had a bit of a challenging period, I think, through the middle of the year when the market generally unwound a bit, and we had to move from me just talking on podcasts on how the sort of product would actually respond to an environment like that to actually seeing it happen at billion-dollar scale. So I think we're pretty pleased to sort of go through a moment like that because I think it's actually a bit of a necessary condition for us to continue growing bigger and bigger, which is proving to people that you can actually sort of unwind without much issue. So I think pleasantly surprised with kind of where we got to and the speed with which it happened.
Yeah. So when we previously spoke, we went over like quite a few of the risks or the issues that possibly may come up with Ethena. One of them being like, during times of, like during a bear cycle when funding is negative or like the funding rates aren't particularly good, there might be large unwinds or like the stable coin might not be yielding at all. So like as you went through this process of dealing with all these issues and all these risks while scaling, what are the biggest things that you came up? Was there anything like surprising? And how did you end up handling all the previously outlined risks?
Yeah, I think the bit that I was actually most surprised about was I I think like the very visceral reaction that Twitter had to us when we first came out, like it was pretty divisive actually in that first week. And I think, the headline interest rate that we had in that week was like 27% or whatever it was. And I think the bit that was surprising to me was that we trade like trillions of dollars of notional in perps like a week, and people just didn't seem to know what a funding rate was. And we still get questions today, which is like, where's the yield coming from? This is not sustainable type thing. So it's been like a bit of an education process to just sort of run people through the idea that yes, there are of course inherent risks to this product, like anything. I think the risks obviously just look very different to a normal stablecoin, but I think we've tried to be as open and transparent around what those are and just allow people to be adults to actually just decide on a risk adjusted basis, does it actually make sense to come into the product. But I think to me it was just more surprising that people genuinely thought that this was a Ponzi, which was unbacked by anything, and the interest rate was just completely made up, which I think was just a bit of a process that we had to go through to, try and educate people and be open about how it sort of works. So, yeah.
Yeah, that definitely makes sense. I think it's like it's almost a meme at this point where if you can't identify where the yield is in DeFi, you are the yield in some way. And I think with a product like this, where it's actually like pretty clear, like you can look through your dashboards and stuff like that, but it's pretty clear exactly where the yield comes from. But I guess for the people that aren't trading perpetuals, that don't understand like negative positive funding, like the directional funding rates, and like the whole cash and carry trade, the whole concept or the idea of the stable coin might be a bit difficult to grasp for them. But I think you guys have done like a pretty fantastic job. Like I mentioned, like the dashboard. You can just like open up the Ethena site, and then you can see, where the collateral is being held, what perpetuals are being traded, what the funding rate is in real time. So it gives sort of a sense of security that like, you're just not fabricating this yield, and it's a whole Ponzi, and the whole thing's going to blow up at some point.
Yeah, and also right, like seeing the yield actually just move according to the market is also another demonstration of that. Right, there was no moment when even the yields got like below treasuries at one point, at sort of the lows of the last few months. Again, like you weren't sort of hiding anything, like you were just delivering what is the market interest rate for this thing to people. And I think actually allowing it to get down that low again sort of showed people that there was nothing sort of artificial about this. You were just producing, or at least like delivering what is the market rate to people. Yeah.
So when the first time we spoke, Ethena was basically only a ETH L1 product using the Ethereum perpetuals to generate the stablecoin. Since then, it seems like you guys have done a lot of work expanding. You expanded into Bitcoin. You're on quite a few different L2s, like off the top of my head. You're on like Arbitrum, Mantle, Base, I believe Binance Chain as well. I believe the Telegram Open Network. Also, you've expanded to Solana. Are you outside of Ethereum and Bitcoin? Are you looking at other assets to potentially run this like cash and carry trade to generate a stablecoin, like such as Solana? And when can we see that in the future?
Yes, Solana actually came online maybe a month or two ago. It just hasn't been done at an enormous size, so I think it's maybe like sub 50 million, and it's sitting on one of those dashboards now. I think Sol is interesting because it just reached that sort of level where the derivative market was actually just large enough for it to make sense for us to integrate it. So I think roughly the way we think about things is like north of $2 billion of ROI, it starts to get to a level that is sort of interesting enough. I think one of the issues though with Sol, at least in the next 6 months, is that you have pretty idiosyncratic like reasons for why funding is not going to be that attractive on Sol. So you had a lot of that sort of FTX estate sales and hedging that's going to be taking place now.
There's a pretty big unlock in March, I believe. So it makes sense that like the funding rates might not be great going into these large unlocks.
Yeah, correct. And actually, if you just literally look on CoinGlass today, you can actually see that reflected. So like BTC and ETH are at baseline, and Sol is like -3 on Binance. I think we're excited. I think once you get through like the real challenging piece of that unlock, I think that the market sort of like reverts over there. But that doesn't stop us sort of being on Solana and actually deploying there. So we did do a deployment there, which to me, I think is one of the more interesting, like differentiated use cases that you see, or at least like ecosystems where they're actually making an extremely strong push to do more around the payment side and really just focus on stablecoins and RWAs quite a bit. I think we didn't do a great job of that initially. We were actually fighting. PayPal had a pretty strong incentive program at the same time when we went there originally, where they were giving people 20% basically to just hold PYUSD at the time. So I think the timing was pretty poor on our side, but I think we're going to come back for a more concentrated push, I think, in the beginning of the next year. And I think you mentioned Ton, and to me, this is actually, we haven't actually gotten there yet. And to me, this is probably the most interesting area that we haven't explored, and I think is generally pretty underexplored by most projects in the space. I think the very short summary here is that sitting alongside Tether in your Telegram app, where you have just distribution to hundreds of millions of small retail users, is a fundamentally different type of user base than we've sort of seen with who we're interacting with on Ethel1, where it tends to be ETH whales like yourselves with millions of dollars coming into USD. It just looks very different in terms of the type of user base, and I think that's something that's quite compelling to us. And we're actually investing in at the moment, building something that looks like a bit of a mini neobank that actually sits on Ton and within the Telegram app, where you can sort of think about it like a Revolut type app, which is all powered with USD in the background. And the core thesis here is that what is the one product that a billion people on Earth actually just want to use? And the most basic financial service that most people want on Earth is just holding a dollar in their wallet and being able to send, spend, and save with that dollar. And so having that integrated within the Telegram app, which is connected to your Apple Pay, where you can actually just save and then spend with USD in your wallet, is a pretty compelling, I think, like useful product for people. And that's a big push that we're going to be making in Q1 next year.
Yeah, that makes sense. Ton, I feel like, is it'll bring in like a whole new user group, or it adds like it differentiates itself quite a bit from, like the various Ethereum L2s, which are basically an extension of Ethereum. I guess that sort of brings me to the next question. Were there any issues or struggles expanding the chains? Let's talk a little about the process. Like, how do you decide which chains to deploy the USDE stablecoin on? Was there any difficulty like integrating into protocols or acquiring users? And were there some chains where adoption didn't really happen and you sort of regret expanding there?
Yeah, I think most of them on our side have been failures, except for Mantle. I think the reason that Mantle was quite different was they've been pretty thoughtful around what is it that's a differentiating factor around Mantle versus other sort of chains, and they've taken a very focused view on saying we want to kind of king make a few assets which have like a yield profile to them. So they obviously issue their own CMETH, they have the FBTC, and then USD was sort of the dollar product that they pushed pretty hard on the chain. And I think part of the issue, and this is actually something that we spoke about in the first pod that we had when it wasn't a very popular view, which was, we just had too many EVM L2s, which didn't look different enough. And there wasn't really like a killer app or asset or reason to actually come onto that chain. So I think that they've done a pretty good job of like really focusing around those sort of like yield assets as really the core drawing point for users to come on there. And so we saw some reasonable success there. And yeah, I think it's actually informed some of our strategy going forward, which is we just want to be a bit more opinionated on where we're going and spending time going forward. We don't really want to participate in short sort of farming cycles for some of these things that pop up and then disappear after a month or two. It's really like, do we have a differentiated strategy like I was describing there with you with Ton, where I think that actually looks quite different. We only sort of want to pursue those or a handful of new ecosystems that I think are coming to market in Q1 of next year. So there's some pretty big L1 launches that are coming out then, and to the extent that we can sort of be integral to their rollout there, that's one piece I'm quite excited about.
Yeah, that definitely makes sense. I still think that holds a bit true today. A lot of the Ethel ones or Ethel twos, I feel like don't really differentiate themselves from one another. You still have the same like 5 or 6 major applications, like stuff like Aave is deployed on like tons and tons of chains, and to the end user, outside of maybe native incentives by like the foundation or the chain itself, that there isn't much to differentiate itself. That's why I think something like Ton is super interesting, because like it adds like a whole layer of complexity where you have like this application that like millions and millions of people use like on their phones as a hub to like to expand from like simply a messaging app to like financial services and stuff like that.
Yeah.
Yeah, so I think one of the more interesting things that that has happened in Athena's growth is the number of other DeFi protocols that are like integrating and allowing people to leverage positions in order to capture like a larger percentage of the yield and farm quite a bit. I know you tweeted recently about, I believe, like the Aave Athena strat, but like a lot of protocols such as like, I don't know, Morpho, Gearbox, like even I guess Pendle's a little bit different, but like the idea is you can use your stablecoin as collateral, borrow more, and then multiply your yield with limited capital.
Yeah.
Yeah, so a few questions about this. Like going in before Athena achieves such a large TVL, did you see this as a thing, or were you anticipating like so many people like using this strategy? Um,
Yeah,
yeah, go
yeah.
ahead.
Sorry, I didn't mean to cut you off. It was actually in the pod that we did together. If you remember, at the very end, we actually described we were going to actually just build a lending market that looked a little bit like Morpho, like internal to Athena. We
Hmm.
had a change of plan where we thought that it made sense to just deploy on the ones that existed already rather than doing that ourselves. But I think
Hmm.
this levered strategy was something that we even spoke about then in that last pod as like a concept. And really, what's driving this is that just identify that there's a different cost of capital basically within CFI and DeFi, and really like all this mechanism is doing is saying that dollars are cheaper within DeFi than they are in CFI for perp funding, and the mechanism through which that you actually force the like convergence of those two different and disparate interest rates is borrowing as many dollars as you can from DeFi to push up the supply of USD and push down funding rates within CFI. So I think we're
Hmm.
actually pretty early in the in terms of the scale of where this can get to. Like what we've done in Aave right now is really just like the tip of the iceberg, and we're obviously
Hmm.
doing a slow and controlled rollout because it does introduce different risks into the system as these pieces sort of build new leverage into the system across DeFi. But yeah, I think the scale of what we can do in Aave there, it's like a $5 to $10 billion opportunity rather than one that's just at one where it's sitting right now.
Hmm. Yeah, that makes sense. So for these leverage strats, they definitely have some risk involved, as all leverage strats usually do. Um, do you have a take, like, or does Athena have a take? Like, are you guys more hands off and allowing people to lever with like low risk or high risk, and if they get liquidated or something happens to their position, it's on them just because they're the one who entered the risky position, or are you guys more hands on and attempting to like mitigate risks for the people that are using these strategies?
Yeah, I think one of the interesting pieces around the design, right, is that you've got the two token model with USD and then SUSD. And so having that unstaking period within SUSD is actually like a mechanical reason for why, because of these like levered strats, you're going to see small depegs within SUSD. And you see that
Hmm.
quite consistently, which is like when people don't want to wait the 7 days and they need to get out, it'll trade, 50 bips or 100 bips below like the underlying.
Hmm.
And really that's there to you can sort of think about SUSD as like absorbing the volatility of these type of things and keeping it away from USD, where it's used as collateral in CFI or like in order books and that kind of stuff. And
Hmm.
so the thinking here is that like, it's crypto. People are going to take these things. They're going to be irresponsible at times. It's a very volatile market, and when you give permissionless leverage to people within DeFi, people are going to take that too far. I'm
Hmm.
not going to pretend that like at any point in the next few years we aren't going to see some sort of liquidation event where SUSD does trade below peg. But really, I sort of view my job as more making sure that the underlying product itself is actually safe and secure, and
Hmm.
that like there's no systemic solvency issue with like USD at the underlying level. And if people are going to get liquidated on the open market, obviously we don't want to be encouraging that to a degree where it's like damaging to the rest of the system. But also
Hmm.
that's like the risk that they're taking on and someone else's edge to basically pick up in that liquidation scenario when it does happen. So yeah, I think the answer there is that we don't want to be encouraging it to levels that we deem like wholly irresponsible in terms of like the level of leverage relative to the size of USD as a whole. But equally, this is what people do within DeFi, and it's kind of their risk to take on.
Yeah, you can't really control. Like people have been running these crazy strats in DeFi since DeFi was a thing. Yeah, I also think that the market right now is mature enough, at least to a point where anytime there's a peg from these events, either liquidations or people like looking to sell to cover their collateral rather than wait for the 7-day unlock, you'll have like a number of people or like a number of entities
Yeah,
arbing these situations to restore the peg and capturing like the basis or the yield from that. So at that point where like you can identify like these situations and you can capitalize on like when people are over levered, it sort of returns the market back to its like normal state.
exactly. Yeah.
Yeah. So like going back to this, were there any like events or any protocols that you can recall where there was like a mass depeg event or like a mass liquidation event where people were like over levered and it cascaded to something that that damaged a lot of people?
Not with USD so far. I think the good example here was actually with Renzo ETH, with those LRTs where they didn't have like the withdrawals like fully functional,
Yeah.
and the token drop came and that kind of stuff. I think that was a good example of like a lot of these LRT projects had like somewhere between 60 to 80% of their entire supply was sitting on like levered looping strategies going into like the eigen airdrop. For Ethena, that number's like closer to 20-25% rather than 80. And just so like on a relative basis, the TVL of Ethena is actually relatively like under levered versus a lot of the stuff that you see within the market. The one piece that is we did actually see in the last sort of like liquidation over the last 24 hours was actually just like some weakness in the price on the order books on exchanges. So I think someone got liquidated pretty badly in the last 24 hours with USD collateral there. And it just seems like the market makers aren't being as tight when it comes to the order books on CeFi as they are in DeFi at the moment. So I think that's one piece there where obviously when you're trading on leverage on CeFi, again, that's going to happen all the time. But I think the CeFi liquidity is a piece that we sort of need to step up a bit. But yeah, we haven't seen anything that's like concerning at the moment. And again, we sort of went through a period where we unwound more than $1.3 billion of supply where people were taking leverage at the beginning of the year, and we didn't really see the peg go like drift much beyond like 20 bips below par.
Yeah, moving on. I wanted to ask about you made a tweet earlier this week about like your one regret was not deploying USDE on Hyperliquid, and I believe like in the past you hinted that you were going to do that. Like Hyperliquid recently launched their token. It's gone surprisingly well. They've really established themselves as like the premier perpetual on-chain perpetual DEX in terms of volume this year. Yeah, do you have any thoughts on Hyperliquid, and is there potential partnership or integration with Hyperliquid in the future?
Yeah, I mean, I think the first comment is obviously just like an enormous congrats to their team and what they've achieved in the last 2 years. I actually knew Jeff and spoke to Jeff before I started out with Ethena, and like as I think Hyperliquid had maybe $5 million sitting in there, so I think it was very similar to the chat that we had last year. So it's been like incredible to see what they've managed to do, and I think especially impressive like his ability to basically bootstrap it in the way that he has, and like really reward the community. I haven't really seen like a cult like community like they've sort of formed around Hyperliquid for a long time, and I think that's a very difficult thing to do. So yeah, I think we're super impressed with the product. I think the regret on our side was just not integrating it as a hedging venue in the beginning, because that probably could have been like a 9-figure airdrop to the benefit of like Ethena.
Oh yeah, definitely.
But yeah, I think there's been a governance post that's come through onto Ethena, which has sort of discussed us deploying Ethena liquidity to help actually just bring funding rates in line on Hyperliquid. So you've probably seen, but they're pretty out of line quite consistently on that venue. And I think there's a bunch of idiosyncratic reasons for why that is, and happy to jump into why that is. But yeah, I think the other piece is once the EVM is sort of live with them, and they might enable sort of portfolio margin beyond that implementation, that becomes a little bit more interesting to start to think about being able to offer like USD as a collateral in the same way that we have with Bybit. Just to be clear, that nothing has been sort of agreed there, or nothing has gone through governance or anything with their community on their side. But I think the work that we're doing at the moment is looking to basically just deploy Ethena liquidity and hedging flows onto Hyperliquid to just start sort of like bootstrapping the liquidity there before we can sort of introduce USD to the EVM.
Yeah. Yeah, so Hyperliquid recently launched their Hyper EVM, and I feel like this is a trend for like a lot of these like perp desks or these protocols that gain large adoption. They seem to like, I think DYDX essentially did the same thing. They're initially deployed, I believe, on Starknet, and now they're their own chain. I know recently Athena announced that they're going to be launching Ethereal. Can you talk a little bit about like the idea behind that and what the plan is for that going forward?
Yeah, I would basically characterize it as Athena wanting to move into something that's a bit more like a platform that other people can build on rather than just a single asset issuer. I think a good example for this is if we compare Lido to EigenLayer, like functionally it's actually kind of similar, right? You're just taking ETH and putting it in a staking contract, but like EigenLayer has actually done pretty well in terms of forming that narrative around, hey, let's go and build all of these things on top of this idea rather than here is just ETH and there's nothing else that sort of follows after that. And so really the core thesis here is that we think having a dollar with a structurally higher return in the market is one of the most powerful assets that exists. And I think that that's demonstrated by the discussion that we're having in the beginning with every single DeFi app within Ethereum kind of like relies on SUSD in a pretty powerful way at the moment.
Mm-hmm.
And so the idea here is that we've got, call it like 8 to 10 different financial application ideas that we think are uniquely enabled by USDE that we want to actually grow and build and help to sort of incubate on top of Athena. These are external teams to Athena, so you can sort of think about it like an incubation program where they're coming. The interesting sort of arrangement here is that often they're dropping some percentage of their token supply to staked Athena holders, and like the thinking here was, can we transform ourselves into something that looks and feels a little bit like the BNB token model, where if you're bullish on everything that's being built on Athena, you sort of have some of that token supply coming back to staked Athena holders. And then equally, there's interesting convexity to the upside. If these applications do well, they obviously become demand sinks for USDE. And like to the extent that you can grow that ecosystem, it obviously helps on the product side as well. So yeah, I think with Ethereal, the short piece here is that obviously Athena's like hedging and liquidity flows now are by far the largest of anyone within the space. So like we're by far the largest accounts that sit on any of the CeFi exchanges. And I think the open interest on Athena is like a multiple of the entire like DEX market combined. And so our ability to basically come in and support in the same way that I was describing with Hyperliquid and actually help to bootstrap liquidity on the short side is a pretty powerful thing. You can sort of think about it as like Athena is the HLP basically of any DEX that exists on chain. And then equally the exchange will run with USDE as the collateral, and the entire order book will be run with USDE with native yield that's embedded into the exchange. And so yeah, I think the way I'll characterize this is that we as Athena want to be neutral across the entire space. So it doesn't help, like Athena's not valuable if we're just like a Binance aligned project or just with Bybit or whatever it is. You actually have to be neutral across all of the venues in the space and help to sort of provide liquidity across the entire space while you do that. And so Ethereal is just going to be one of those apps that we look to sort of support once they get to sufficient sort of scale for us to do that.
Do you have a time frame as to when you, I guess, hope to launch, or when the first apps will arrive on Ethereal? And is there going to be a native token for Ethereal, or are you just going to use the old Athena token?
Yeah, so the Ethereal team's like completely separate. This is like an X team that came out of Synthetics. They approached us to sort of build on Athena. That it really is not us like building that internal to Athena, and that's quite deliberate. There's also Derive, which has been an options and perps protocol that's been around for a while. It's the largest sort of like on-chain structured products protocol, and they're sort of part of this the Athena network as well. Yeah, the Ethereal team I think is sort of planning for late January for initial testnets to come out, and I think the sort of full product will be something a couple of months after that.
That makes sense. Let's talk a little bit about the Athena token. Like this is since we've spoken, you guys launched a token. Obviously, you had I believe you're on your like second or third points programs. I forgot the names of all you guys always have some cool names for your points programs, but
I forgot about them as well.
Yeah. But yeah, I think like recently, or at least in the like last few years or so, that there's been a lot of chatter about like the structure of these types of tokens, whether it's like a lot of venture capitalists got in like in early rounds at like a much lower valuation. They have like these vesting schedules that are unlocked, like a lot of them potentially are dumping on retail or selling these tokens at the locked tokens at a discount. I don't think it's native to Athena or anything. I'd say like a vast majority of the protocols that have come out in like the past few years that have launched a token sort of have this model where they raise funds from VCs. They have like a relatively low float. They airdrop some to users, but like a majority is either locked or like unreleased at launch. And I think like the public has been sort of critical about this model, just because a lot of the time the venture capitalists don't really do much. Like they don't really have like a much value add besides putting in like initial capital early, and like they're using the retail, the actual users of the protocol as exit liquidity. And I know the Athena token has been, it's gone through its like highs and lows over the past year. It had like a pretty solid launch, and then we saw like a prolonged period of basically the number going down up until recently, where there was like a pretty big bull run across all of crypto, especially DeFi coins. So talk a little bit about like your thoughts on this, like high FDV, low float meta, and I guess a little bit about how you plan or are currently adding value to or utility to the Athena token.
Yeah, I've got a lot of thoughts on this, so it might take a while, but I think the first thing to say is that I actually understand the position and like the frustration that comes from the market when you do see these things come out. I think part of the issue is, as a team, you don't actually have that many levers to pull when it comes to thinking about increasing that circulating float. So if you remember when Athena first came out, the points program was actually extremely short. It was like 5 weeks long. And if you go look at the quote tweets that were there on the Athena Labs account when we sort of announced things, I think people were like extremely pleased with like the amount that was being dropped for the period of time that people were in there. I think the thought process that I had on my side was actually that I didn't like what I was seeing with some projects basically extending points programs for a year or two until you kind of reach like the max capacity this thing could ever get, right? So like Eigenlayer, I think, is a good example here, even though, like the team, we work with the team. But I think the strategy of running to like a 20 bill of TVL, it's like, what is the growth story that comes after this? And what I wanted to do was try get the token out into the market where we could actually grow with our users through time. And so I didn't want to be at that like end state of this is how big this can get. And hopefully you could sort of grow with your users through time while you did that. I'm giving all of this context because it starts to just become a little bit ridiculous in terms of the implied return that people make. If that number was like 20%, for example, on the initial drop that we did, people made 3,000% APY by putting money in a box for like 5 weeks. And, from our perspective, it's one of the more precious resources that you actually have to manage to actually try to grow the protocol through multiple years rather than actually just trying to appease people with a huge drop in the beginning. So then if we like think through the other buckets that supply could come from, obviously the team is locked up, and I don't think anyone's wanting the team to be there liquid and being able to sell on day one. Equally, investors are because of US restrictions in terms of them investing. And so really, to me, it felt like a little bit of a market structure problem, which is we don't really have a compliant way to actually get liquid tokens into the market through something that might look like a compliant ITO, for example. And I think that this is something that would actually be a huge unlock for the market, which is, can you try and sell 5 or 10% of the supply at some sort of like reasonable valuation that people can get into, and that's liquid. And I think that obviously just helps with price discovery in the beginning, where you do have some of these constraints just in terms of how high that supply can go. I think the other piece is that we did try and make some efforts to try and get like retail users in through Echo. So we were the first project that actually launched on Kobe's platform, and the pre-market for Athena was trading at 10 bill when his platform launched, and we did a round at 300 for people to get in there. And so that was like an immediate 30 to 50x when we sort of launched for those guys to come in. And I think that was just another piece that we're trying to at least make some sort of effort at least to show people that upside. I think there's like a meta sort of comment on this whole thing, and I think Athena is actually a great example here, which is the market like corrects these things pretty quickly, which we obviously went through that trough that you described, But then some projects come out on the other side, and sometimes you can actually grow into those FTVs, but you need a little bit of time to actually grow the product and sort of prove people right through time. And so I think in the beginning it sort of might look like a high FTV, low float, and then the float of Ethena sort of doubled through the course of the last year, and we sort of have recovered a decent amount of that price action that you saw in the beginning. So I think sometimes you do see these things where you can actually grow into that initial sort of like awkward low float, high FTV dynamic that exists on day one.
Yeah. So in retrospect, for like the past year since the token launch, if you had to go back, would there be anything you would do differently in terms of, say, maybe distribute the token more to stuff like Echo rather than like these large venture capital firms? Like maybe design like the points program differently, maybe design the vestings differently, anything like that?
Yeah, 100%. I think it's the biggest regret of mine in the last 3 years was how much I sold and the price that I sold it at. And I think part of the issue was actually that Echo as well was literally we're delayed doing the Echo piece beyond our like initial fundraise because it literally had just not been built yet, and so it wasn't actually ready there for when we were doing like the initial rounds. But if I could go back in time, I would take probably 80% less of the VC funding that we did take and try to do a lot more through Echo. And I think that this is just like a general comment, which is I do genuinely believe that these platforms are going to be extremely disruptive for like the VC industry going forward. I think some of the comments do take it a little bit too far. I think like there are still like VCs that are extremely helpful and useful in a bunch of different ways. And I think throwing everyone in this bucket of like VCs are completely useless, I think is too far on the other side. But I think that there is like a big bucket of basically just pools of money which don't provide anything else outside of like dollars. And I think that they're going to struggle to sort of compete with this pushback that you're seeing from things like, loud angels who are coming in and then platforms like Echo as well.
So for the token itself, are there any levels of expansion for the value proposition? I know you offer staked ENA as well, and then you offer like a multiplier based on like the amount you have staked versus your TVL. But I guess talk a little bit about the process of like when you launch a token, how you envision the utility of the token, and has it changed or expanded since then? And are there any are there any other use cases you're looking for in the future?
Yeah, so I think just that comment earlier around my thoughts around BNB being a very powerful token model where you're getting the airdrops from all of the launch pools. I think that was just something that I'd done a lot of thinking about in that period where things had sort of cooled off in the market. And so we are trying to sort of replicate that now with that entire ecosystem that I was describing earlier. And right now you're getting roughly 15% of Ethereal is getting airdropped to SN holders, and then 5% of Derive. And that's obviously going to continue as we continue sort of adding new apps to that ecosystem. Wintermead also put forward a sort of a fee switch type proposal a few weeks ago, and that looks like it's going to be implemented on current sort of figures that potentially sometime in sort of January. And I think that that's just like a very clear tie between the growth of USD, the performance and like revenue that's generated from the protocol that could potentially come back to NA if that sort of fully passes. I think one of the interesting things about Ethena is that like at the scale that we're at now and where you've seen funding rates in the last few weeks, it's one of the few protocols that actually kind of makes sense from like a business model, if that makes sense. I think I have a pretty cynical view on most businesses within crypto, where I think like only exchanges and stablecoins are like the killer sort of like business use cases or business models that make sense.
They're like the only ones that are really generating revenue, like to a point where they're sustaining themselves.
Yeah, exactly. And yeah, I think the numbers start to look pretty crazy when you have 20, 25, 30% yield on $5, 10, $15 billion of supply. So we've had pretty consistent weeks where we're generating more than any application within crypto, and quite consistently above Circle even. And so, I think if we can continue sort of growing at the pace that we are, and those interest rates stay anywhere near there, Ethena does actually become, I think, pretty interesting from like a cash flow perspective as well.
So moving on, you guys recently announced a partnership, I believe, with BlackRock for a new stablecoin, USDtb, I believe is the ticker.
Yes.
Can you talk a little bit about like what you're doing, how it differentiates from USDE, like a little bit about your motivations behind that and your future plans for it?
Yeah, so I think part of the thinking here is that my observation of where I think normal fiat stablecoins are going as like a business model in the next few years is basically like a race to basically having zero margins. So Coinbase, sorry, Circle started to share quite a bit of the interest with Coinbase, where you're holding USDC on the exchange, and they're starting to do that on different venues as well. And I think where this basically gets in an end state is that like fiat stablecoin issuers are making a very small amount of money, like 10, 15 basis points on those products, and basically all of it is going to be captured by distribution, i.e., centralized exchanges. And so really, this product is just taking the tokenized treasury fund that BlackRock has, trying to make it a bit more useful and acting as like a conduit where we can actually just take it to the exchanges that we work with on a day-to-day basis. And you can really think about it as a product where we're taking it and then sharing it with the exchanges, where the business model looks a bit more attractive than them supporting Circle and Tether. I think the interesting thing here is that stablecoin issuers, I think, are most valuable when they're neutral infrastructure across all of the exchange venues. And if you're tied to one of the venues, it actually makes you less attractive to the other ones. So if you're too close to Coinbase, for example, I think that other exchanges don't want to get as close to you. And so really it's just designed as a quasi-public good for like exchanges and distribution partners who can see more of the economics of that product as we sort of share it with them for distribution. The question then is like, why are we doing that? I think that there's two different reasons here, which is we want to have both products like side by side with USD and USDtb, and to the extent that we can sort of help distribution partners with a product that supports them, they're more likely to be pushing USD to their users as well, where they can be given an option to basically say where on like the risk spectrum are you comfortable holding different dollar like products, and so and obviously USD is just an area that we can make a lot more money versus like a normal fiat stablecoin, especially with rates coming down. And then I think the sort of piece that comes after this, and the piece that I'm spending the most amount of my time on now, and the big vision of where I want to take Ethena in 2025, is really thinking about taking an asset like USD and then pushing it into TradFi distribution channels, and actually working with BlackRock to help them distribute their product within crypto opens up an interesting sort of like partnership there. We'd actually be looking to put a regulated wrapper around USDE and then try push it into TradFi on the other side. So yeah, that's sort of the rationale on our side. And I think we're pretty excited where we think basically having this relationship with different exchanges is actually the key to success around these products. And I think there's just an interesting angle here for us to be able to push this and reasonably challenge like the existing like Tether and Circle.
Mm-hmm. Yeah, that definitely makes sense. I feel like a lot of the wrapped assets or like the exchange specific assets have kind of become a bit tribalistic now. Like each major exchange has their own version of, like staked Ethereum or wrapped Bitcoin. And like you see like recently with Coinbase delisting or like the WBTC in favor of their CBBTC and stuff like that. Like a lot of there's a lot of like individual incentive for these exchanges to not promote competing products with like the ones that they've launched, but like for the end user it's not particularly great because now you have like instead of like one industry standard for like a wrapped Bitcoin, you have like 5 to 10,
Yeah.
and like they're only available, or the liquidity is only available on a specific exchange or like a specific chain that supports a specific exchange and stuff like that. So it leads to quite a bit of fragmentation among markets, but then also individuals.
Yeah, 100%. I think it just creates a net worse user experience all around. And I think I think FDUSD is a good example here as well, right? Where the supply of that has shrunk pretty dramatically in the last few months. And I think like the very basic explanation for this is like, if you need to move your collateral as like a HFT fund, market maker, or whatever it is, you do not want the friction of swapping from FDUSD into USDT and then sending it to a Bybit or an OKX outside of Binance. And that very small friction is actually a pretty big deal. So I think the more that everyone sort of pursues these like own product on your own little island, it's actually just a net worse user experience. And that's where you hope where if you can come in as like a neutral party between them, it sort of gives them what they need on their like revenue on the revenue side. But then I think actually creates a better product for users.
Mm-hmm. Okay. Yeah. Moving on. The last thing I wanted to talk about, you wrote a blog that was titled the Ethena Endgame. Was that like a few weeks ago or like a month ago?
No, I was like 6 months ago. So
Oh, was that 6 months ago? Oh, no,
yeah,
man. I guess time flies.
yeah,
But the blog basically outlined your plan for 2025. You talked about a little bit of the intersection of decentralized finance and traditional finance. You want to talk a little bit about what you wrote there and like how you envision Athena expanding in the next year?
yeah. I think it's just circling back to that piece that I was talking about there, where we're like the core focus for us. I think started with 3 steps of growth, where we started with DeFi. I think covered most of the ground there now. CeFi was the big next step for us, where I think 60% now of the centralized exchange market we've covered off in terms of like collateral and integrations. So there's a bit of work still to do there. But I just think the scale and the opportunity of TradFi as like an opportunity set is so much more interesting and addressable now. I think the most interesting like macro tailwind around this entire thing is also just like the rate dynamics within the US, because as interest rates start to fall in the US, the rates on this product are actually negatively correlated. So we've even seen that in the last couple of months, where rates come down, demand for leverage in crypto picks up, and funding rates go in that opposite direction. So being able to come to people within TradFi where risk frees are going from 5 to 4 to 3, and this product's going from 10 to 15 to 20, it's actually pretty compelling to them to offer that as like a diversification to $100 trillion plus of fixed income product. And so I think for us, that's sort of I see a pretty real path for us to be getting to 10 to 15 billion, just doing what we're doing now and sort of growing in the market as it exists now with crypto native capital. But I think if we're going to take that step to like 20, 25 and beyond, it's going to take plugging into those type of pools of capital. And that's sort of the piece that I find the most exciting about the next year. Yeah.
Mm-hmm. So in your process of accomplishing this, have you experienced any pushback from regulators, or do you think like the regulatory landscape will change in the future to make the intersection of TradFi and DeFi more accessible for not only Athena but like any protocol?
Yeah, I think well, the interesting piece about this is when you put like a regulated wrapper around it and you're actually offering it to accredited investors who are coming into it with the prospectus and being able to look at it like an investment product, it actually opens those doors where people can just look at it in and access it in a much cleaner way. And so I think, yeah, from our perspective, being able to put those actual wrappers around things to actually offer it into institutional type clients, I think that's kind of the key unlock to do that properly.
Yeah, that definitely makes sense. One final question before we let you go today. I wanted to know your predictions in 2025, general crypto predictions. It could be about Athena, it could be about the whole stablecoin environment, the whole regulatory environment. What trends do you think will continue? What trends do you think will fall off? What types of protocols, or if you want to show any other protocol besides Athena, which ones do you think will capture, like a decent number of users, a decent amount of market share, stuff like that?
Yeah, I think it feels quite binary to me about where the cycle goes. So I think if central banks don't start buying Bitcoin hand over fist, I think we're not that far actually from the top of where we can sustain ourselves. I think even looking at the last few weeks, Saylor piling in 10 to $15 billion and like prices sort of like treading water is not the greatest sign. And you sort of think about what is that next level or size or magnitude of capital that's required to actually take it to the numbers that other people are throwing around. So I think, yeah, for me, it's like, if you do see that central bank buying and it's real rather than just like people speaking about it, then I think you can start to get like beyond the 200K sort of figure. But I think if that doesn't turn up, then I don't see us like getting well beyond like 150K personally. I also think that Bitcoin and like alts in general have like a totally different life cycle going forward. So I think now having ETFs plugged into BTC and just the pools of capital that are interested in it now means you don't really see like 80% dips like we saw in the last cycle. That's assuming we don't see fraud at the largest like entities that we see within the space at the moment. But I do think alts, and this kind of mirrors what we saw in the last year, I do think alts will continue to do minus 80s, minus 90s with Bitcoin either like going flat or slightly bleeding. So I think like I'm still incredibly bullish on BTC in like the longer term. And I think it's the only asset in the space that you can legitimately say is undervalued. You can actually look at it versus gold and say like, I think there's a rational case for why this is undervalued. Everything else I think is 10 to 100 times overvalued with like any normal lens. And so I think for that reason, alts will continue to have these different life cycles versus BTC. And I think, the longer I spend within the space and more time I spend within the space, the more bullish I become on BTC versus everything else.
Yeah, that definitely makes sense. It feels to me that like a lot of these alts, we talk a little bit about, like the venture capitalists essentially investing in early stage projects. I feel like a lot of the valuations for these alts are derived from the fact that like these VCs need something to invest in. I mean, it's not like really sexy or cool to talk to your LPs and tell them, yeah, we're just like dollar cost averaging into Bitcoin because it's like the number one asset and it'll go up. It's like the value add. But by these firms is quite low there. So like a lot of the times, like the valuations of these altcoins are quite high. And then like we end up in the meta where there's like a low float, so the valuation is sustainable just because like the circulating tokens supply is kind of low. Other than that, besides Bitcoin, are there any other like use cases, maybe specifically for Athena or like the USDE stablecoin, or just like stablecoins or crypto in general, you see taking off in the next year?
Yeah, I think I think stablecoins are in like their own super cycle, and I think we saw that last cycle as well, where prices were down, but actually like active wallets using stablecoins was up and to the right chart for forever. I think that does continue. The interesting dynamic around stablecoins now, I think, is that you can have every single Web2 and fintech business in the world is just going to launch their own, and I think every week you open up and you see like a Revolut, Robinhood, everyone thinks that they're just going to do their own. But I think actually, like looking at PayPal and the struggles that they've had in the last year is actually pretty emblematic of where I think that all ends up, which is everyone has the confidence that they'll be able to do this and succeed and think that it's an easy thing to do. But then people realize how difficult it actually is to scale a stablecoin to something that's meaningful in size. So I think like where the market goes is that the payments use case of stablecoins definitely has a 10 to 100x growth in terms of where it is now. The sort of crypto trading use case, which is where Tether has really dominated, and like the SOV use case where they're used on Tron, Tether has just an incredible moat there, and it's very difficult for anyone to sort of unseat them there. But I do think we see crazy amounts of growth on the payment side, but that's more captured by like Web2 and fintech incumbents rather than like someone who's in the market right now and trying to sort of push their product. So I think the net result of all of that is that Circle is really challenged because all of these new guys who are coming into the market are using their own solution rather than plugging like a USDC into a PayPal, for example. And like the moat that Tether has, especially from like a business model perspective, is just so powerful that it's really difficult to get into there. And really like Athena's use case is actually more going into the use cases that Tether sort of dominates, which is like trading collateral on CeFi, SOV, saving asset in DeFi, and potentially like the developing world as part of that. So I think it's sort of like Ethena and Tether are servicing the same side of the market, but like USDC's piece within the market, I think has a lot more competition that's coming to market pretty soon.
Is there ever any concern for you that Athena scales like a bit too quickly to a point where we're talking about like it gets to like the market cap of something like Tether, where you represent like a huge percentage of the stablecoin issuance, but also like a huge percentage of the open interest on all these exchanges?
Not really, to be honest. I think it's kind of like self-correcting, where we saw this year, right? Like it was growing like crazy in the beginning, and then we kind of got too big and relative to the market, and then interest rates came down, and we just unwound in the other way. And so it really is. It's like I don't even think about what is the like supply that should exist for Athena. I actually just view it as like there's going to be an equilibrium clearing interest rate for what should funding rates be in the market. And let's say we're plugged into these TradFi asset managers that I was describing. They're going to look at this and say, I'm willing to come into this product at like risk-free plus 200 or 300 bips. And every time it goes like 500 wide, they're just going to shove as much money as they can into this to sort of compress it down to a level that makes sense. And so I really think about it more as like there is going to be an interest rate that makes sense for people to be in here. And once we have this like plumbing and infrastructure in place, that unlimited amounts of capital can flow in and out, all that's going to change is like the supply will go up and down to solve for that interest rate essentially. So yeah, that's how I sort of think about things, where if we get too big, the interest rate will fall and then people will come out.
But yeah, that makes sense. And I believe like we've pretty much seen that like in real time where, the supply fluctuates by hundreds of millions at times where, like the funding is negative or the yield isn't great. And there's, like a mass line for redemptions. And then like
Yeah,
I've seen recently in the bull market where, everyone's long on like every perpetual exchange and the funding is insane. You see like a mass growth in TVL. So it's just the type of thing where, um, the individual users of the market will always dictate to if it expands to a point where like the yield isn't sustainable or the rates aren't sustainable, like you will have it, like the individual users will start like redeeming and looking elsewhere where they can capture like a better yield or a less crowded yield.
exactly. Yeah.
Yeah, I think that's all we have for today. I appreciate you coming on. Before we let you go, you want to let the listeners or watchers know where to find you online and also where to find updates on Ethena?
Yeah, I think the Athena_labs Twitter account is the best spot, and there's links to mine over there. It's just a bit long to spell out on a podcast, but it's got got everything you need on the Athena one. But yeah, appreciate you having me on.